chat on the market forward with what to expect from Infosys this quarter. My colleague Pranay Jain is here with the lowdown. Pranay, what do you think the numbers would be like?
Well, Q1 is usually a strong quarter for Infosys, and we are expecting a revenue growth of 2.8% in constant currency terms. Out of this, 2.3% is expected to be organic, and the rest will be from one-month consolidation of Stater acquisition. Since we are anticipating a 30 basis point cross-currency headwind, the revenue growth in dollar terms could read at about 2.5%. At the operating level, EBIT margins are seen declining by about 110 basis points, so we are penciling 20.3% compared to 21.4% last quarter. But because the company is going for a higher number of H-1B visas, that could be an added weight, and some analysts believe the drop in margins could be even 130, 140 basis points, besides the usual headwinds of wage hike that we see in this quarter and the rupee appreciation also that has turned around. Net profit is seen declining by about 8.5%. That number does seem a little big. That's because in Q4 they had an income tax reversal of $14 million, which had supported PAT in Q4. So if you adjust for that, this number will be lower. Going forward, the key monitorables would be demand in soft spots such as BFSI, retail, manufacturing, particularly in Europe, and life sciences. And what's the commentary like around semiconductor and high-tech vertical? Because they have some exposure to China, and whether that has seen any impact from the US-China tariff war. Large deal bookings will be important. Q4, the number was about $1.57 billion. FY19 overall has been spectacular for them. So whether that momentum continues, if the ramp-up of large deals is on track or not, and how's the deal pipeline looking besides the performance in digital, which is one of the key growth engines, and how's the top account looking like? One more thing to watch is employee attrition, which remains elevated at 18.3%. So what efforts the company is taking to reduce that? Talent strategy in US, outlook on overseas growth, because we are seeing slowdown in global macros. So whether it is impacting deal closures or client spends or not. Commentary on the shareholder return policy, because now the buyback tax of 20% has been proposed. And lastly, for the FY20 guidance, we are not expecting any change in management's tone from what they guided at the end of Q4.